Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Tuesday, April 19th, 2022. I'm going to start out as usual with the major stock indexes, brief updates there, and then hit on some of the other recently highlighted trade ideas. We'll do updates on crude nat gas, both highlighted recently. If there's anything to point out, I'll loop around, time permitting, to the precious metals treasuries. But those were just updated. It's really no new changes there. Maybe touch on the precious metals. They're down today, so I'll talk on those. And that REDU trade idea that still continues to move up. I want to share some thoughts on it as to where I plan to book profits if we get those as of now. All right, starting out here with QQQ and SPY, the major stock indexes, they are still above those levels. I told you I thought those levels will probably break. That's where I favor, but at this point in time, they're moving up pretty impulsively today off these positive divergences. So what that does, just kind of, my mindset, a little less. Now a little less favor that very near term. And even reversed my active trading positions to long today. I'll show you why in a second here, what's going on the short-term charts. But most importantly is, you really can't ignore these bullish divergences. If they're taken out, I maintain what I say. If they're taken out without much of a rally, especially a move past that, 357 level, then that's going to be indicative of a larger bearish trend, i.e., early stage, most likely early stage bear market action. And even if not, I want to just speak to especially those of you new to trading investing is, keep in mind, if you're frustrated right now, whether you're bull or bear and you're trying to swing trade, this is what's going on here. We're moving sideways. The ranges are pretty big. So active traders, if you get it right, even if you're not batting 1,000, nobody bats 1,000. You just need to bat over 300. Depends on your risk-reward ratio, how much you risk on each trade compared to loss. But there's money to be made active trading and swing trading too. Again, don't get me wrong. We've swung down that, the best big part of that initial move down there off the highs. But here's the bottom line. Let's just keep things where they're at. We still have that divergent low. We had a breakdown in QQQ, a breakout, I'm sorry, and it came and it made a marginal new low, but it was still, all it did is extend the divergences. So that is that. And again, until and unless we take out those yellow levels I gave you yesterday, about 335, a hair over, we'll round down to be safe, 335 in QQQ. And on SPY, you got it right about 436. Let me just round that up so I know it's hard to see in the video. That's 436. Those are the support levels that need to go. Now, what's happened today is, number one, SPY broke out. SPY had this downtrend line. Boom, there's a breakout right there. You can see resistance. Next stop up here, next resistance level I have is about 444. And then there's a gap in between, so maybe some reactions there. But this is a pretty big level that I'd really, for the bearish case to stay alive and well, want to see any rally capped at. Now, we may or may not get there, but if we do, again, that's about 449.72. Let's call it 450. Now, again, if this just craps out, just as this rally starts looking good and they start buying into it and we go out and break those lows, we take out the divergences, that's quite bearish. And that's what happens in a bear market or bear trend. Just like in a bull trend, you set up on the shorter term intraday charts, you set up bearish chart patterns, head and shoulders, wedges, any other type of even bearish candlestick reversal patterns, and they look like legit bona fide sell signals, but guess what? They don't play out for their measured targets, or even sometimes at all. And the dip buyers come in and buy, and then you get the next leg up. So that's what I'll be looking for to, show some characters. Nothing's changed in the longer term chart since I covered it yesterday or last week. We still have a lot of those long-term trend indicators bullish, but we still are also above some very key long-term major support levels like the 20-month exponential moving average, and certain key stocks are still holding up above support like Apple. So that's it. It's kind of a mixed bag. And again, if you're getting frustrated, wow, Randy, that's bullish, that's bearish, that's trading. There's right now, you can make a case either way, but I'm just giving you the facts. Here they are. We have positive divergence on the 60-minute time frame. The last time we had a divergent low was right here, and that led to a rally of in the S&P 500. I'm just measuring from that low. That was about a 12% rally. That was a much larger divergent low, but it is what it is, and there's a breakout. So that's what it looks like on the 60-minute charts. There it is on the NASDAQ 100. Last divergent low came in at 318, and we rallied all the way up to about 371 almost, about 16% rally. And there it is. We had this divergent low right here, and we're above there. So that's it. Let's now we are at a minor resistance level right here. Minor, yeah, minor, not major, not moderate. With the next resistance up there about 347.45. So we'll just watch this. If we turn down here and then go out, take out the lows, take out the divergences, that's pretty bearish. If we head up there and then turn down, that would have been near-term bullish, short-term bearish. And then to get a little more granular, let's zoom down to the 5-minute chart here. I told you this is one of my favorite active trading time frames. And so what's going on here is you had on the 5-minute chart right here, you had a divergent low, i.e. Bullish divergence, positive divergence, just like you had a negative divergence right there. So that divergent high on the 5-minute gave us this. This divergent low so far has given us this. But look what's going on here. This is a lot of big rips and dips. This to me is saying there's a lot of distribution still in this market, and there is accumulation. You're seeing, these could be most likely our big funds selling, getting out of positions. Other funds thinking that, hey, the rate increases are priced in, and we're still going to have low rates. In other words, bull bears. But what you're seeing are big rips and dips. And we'll see how this is resolved. But what I was telling you near term, what's happened here is we've continued to defend this uptrend line on the 5-minute chart. So that's something to watch if you're an active trader, even a swing trader, because a break of this, these are just very brief whipsaws. They don't even count because this is a 5-minute chart, and those little white parts, I know it's hard to see in the video, the skinny part, the candlestick shadows, and down below they're called tails on the downside, wicks on the upside. That means it just happened intra-period, but we closed right back above there. So that's the line to watch. And then I have put this yellow line here, and we broke out. That was near-term bullish. Why? Well, because it's resistance for the last few days. Again, this is micro-analysis. This is the world of the very active trader, not the guy or gal that works a 9-to-5 job. Well, 9 to 5 doesn't exist anymore, but whatever iteration of that there is now. You had that resistance, boom, 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 boom for the last few days, and then pop. So that puts us near-term bullish, and the fact we keep holding this line after the divergent low. So a stop at worst case, well, not even relatively tight. Of course, if you are bullish, you could have a stop under that. But at this point, I think a solid break of this line is going to bring us down to test that low. And because it's already been tested, we'll probably take it out. These are just micro levels. And again, this was a breakout that's pretty powerful. So maybe you get a little pullback here. Near term, that puts it kind of bullish. And then one more thing I wanted to show you is when you go to the daily time frame of QQQ, one of many indicators that I like to use is the PPO. And you can use it different ways. You can look at divergences, bullish and bearish, right? Those mark highs and lows, or often, I should say, they don't mark high and lows. They often precede trend changes. And then you also have where the lines are, and the traditional old, if you start reading up on using PPO, they consider bullish and bearish crossovers, both of the lines themselves. Here's for example, there's a bearish crossover when the PPO line crosses down below the signal line. But then you also have bullish and bearish crossovers of the zero line, which is right here. Now, I take that and throw it out the window because when you can see, at least recently, and that's the thing, a year from now I might have these lines elsewhere. But the zero line isn't what does the trick. Lately, it's been down here from about that negative 0.88 to negative 0.57. Those are my lines, and they denote bullish and bearish trends. And what I'm referring to is the 9 EMA, aka signal line right there. And so when you look at these levels here, I'll just draw first the yellow line for you. You can see when the PPO signal line is above there, and the red is really what's done the trick. That's why I have the red. That's where we need to remain. So let me just do that over for you. All right, so let me just draw the red line at, again, negative 0.88. That's where it seems to be the magic number. Why? Because when we're in a bullish trend, you come back there in that signal line, which is the last of the two to cross. That's why I use it. When it's above there, and the trend is bullish, and that often acts as support. But when you break it, it's bearish. And you broke it here. I squished this down. Let me turn off all those other, well, no, if I turn off those lines, the PPO lines go away, but I'll do that. That's fine. No, we can do it like this. And so you can see, boom, that was when we had a bearish cross, and it said bear trend, bear trend. But then we cross back here, that's bullish, and now we're still above there. Okay, that's one thing to note. And that's what's the takeaway, guys. I mean, Randy, well, that's bullish. This is bearish. It is what it is. There's just not overwhelming evidence right now. I still maintain my long-term targets based on the weekly charts. Right now I'm speaking to what I'm seeing on the daily chart. And in a very simplistic view, I see a double test, double bottom with positive divergence, and a rally off there. So far, we had a pullback. We did fade all of the breakout, but not all of the rally yet, the breakout of the downtrend line. And so far, we're holding that level. So, again, I told you where I think we're going, but where I think we're going long-term on the weekly chart, we can do this first and get there, and I'm still right. We can go down from here, and I'm still right. Where I'm wrong is if we start going up beyond any reasonable stop point, which, again, to me, big level, the 200-day moving average, and this. And, again, that's being wrong on the long-term call, the swing or trend call. Short-term, that's 5-minute charts. And I always tell you this, I'm in and out so often on certain days. Some days I sit back and do nothing. I don't feel like day trading, or I don't see the opportunities. And there's days I'm long. I flip the NQs 6 times over in a single day, long, short, long, short, long, short, or more sometimes. But so don't confuse active trading with swing and trend trading. They are 2 different things. Yeah, and since I'm still on the broad markets, 12 minutes into the video, I'll just show you the 5-minute chart of QQQ. It's not going to look exactly the same as NQ because NQ has those round-the-clock trades, but that's a comparable level that we took out today. Remember, these spike highs here, we had higher highs in NQ because it was trading. This is only regular session trades in QQQ. So right now, I would change these lines. I've had these here for a while, and there's a big old gap right there. There's the bottom of the gap, but at this point I would take this line and move it up, or I would add a line. Maybe I'll leave that one there at the bottom of that gap. I see reactions, and add a line right here because you have 2 distinct highs. So I would say right now at this point in time, unless this early session pop and the breakout of those resistance levels I mentioned fail, 342 you want to stay above. I'd say that's a likelihood to run up there at about 347.50. And again, you can have a tight stop. And that way, if it peters out and we fall down, then so be it, and you don't lose much. Or again, stand aside. If you are not an active trader, this is all noise, and you're going to get chopped to bits if you don't know what you're doing. You can always try, start cutting your teeth, trade small positions, and again, the premise is most of the things are the same, whether it's a daily, weekly, monthly, or 5-minute chart. Look for support resistance levels, trend lines, price resistance levels, divergences, overbought, oversold, all that kind of good stuff. Incorporate volume into your breakouts and things like that. Okay, and for those of you that are getting frustrated with that recent chop, when I looked at that 5-minute chart of NQ, it looked like an EKG, blip up, blip down, big swift moves. But at the end of the day, really not going very far over the last few weeks. This is where the easy money's been made lately. When Russia first invaded Ukraine, I told you guys I stepped back, stopped trading crude for a while. It was just too event-driven, and the technicals weren't working. But what happens is after that whole thing dies down, and as far as the way crude is trading, then it becomes very tradable. Crude natural gas, and this thing's just been printing money for me in the last few months. Yesterday I showed you this uptrend line. Well, back here I showed you the divergent low, bullish falling wedge. There was a breakout, long trade to be made, and then we started diverging. We ran into resistance here, popped that a little bit, but that was also yesterday highlighted as support. So in yesterday's video, so you get a sell signal on a break of the trend line and the minor support just below, and we rolled. I might have been covering the maze back then, but I replicated the trend lines or the levels. You know, when the futures roll, the price levels are going to be a little bit different because it's a different futures contract. But that being said, there's the breakdown in crude running down, and that's already good for 4.5% in less than 1 day. Again, much quicker gains, and it goes both ways. If crude, let's say crude had a false breakdown or bounce off that level, it could run up that much. So if you're going to trade it, if you're going to trade anything that easily moves up and down 5, 6, sometimes 10% in a day, like natural gas, which I'll get to in a second, you use a smaller position size. You don't need a lot of money, especially if you're trading futures. They're already leveraged. CL, I mean, a single contract, you're making over $1,000, easily a day on a move like this, several grand. And it goes the other way if you're against it. And if that contract's too big, but you like futures, because again, you can get it early. If you wait for USO, these breakouts often occur, after hours, pre-market, before the USO or the ETNs are even trading, or if they are trading, they're very liquid early on in the morning or later in the afternoon. You can only use limit orders, so you can't jump in. You got to chase your order down. It's not filling. You're right on the call. You're trying to chase a breakout, etc., etc., etc. So there's a lot of options that have smaller position size. CL's your big contract. Crude futures, but MCL is the mini or micro, and then they have another one, QM, I believe, which is this is actually the smallest right here, and they all trade on these same price levels. There's I think that's the micro and mini, or that's the mini, MINY, I think it's called, and that's a micro, and that's the regular contract, and they just have smaller leverage factors. So if you want to read up on it, read up on futures, understand how they trade, and when you need to roll them and all that good stuff. And also, one of the benefits, one of the things I like about futures, a lot of people probably aren't aware of this, you can short them in an IRA account. Not that you should, unless you got a big IRA, you know what you're doing. Don't short in your IRA. Don't short at all if you don't know what you're doing. But that's been forever and a day. You can't short stocks. There's no short selling. The SEC bans short selling in IRAs, but for whatever reason, you go to, I know certain brokers, like Interactive Brokers, you get a margin IRA, and that lets you short futures. So you can game these little rips and dips and tax-free or tax-deferred, depending on whether you have a Roth or a traditional. All right, let's move on. I can just see that chart was not centered. Now you can see what we were on. My apologies. Sometimes I move these things around. I'm only capturing a small part of my screen on this monitor, but these are the Junes. Remember, we were up until last week. I was showing you the maze. Time to roll those over into the Junes, and there's what the maze looked like. So that was it. Same kind of zoomed out a little here. This is 3 months. There's that breakdown. And yeah, we're at support, or coming up to support right now. Let's talk about Nat Gas, because that one was thrown out recently, and like I said, there's nothing more beautiful, in my opinion, than a crowded rush for the exits when a trade goes parabolic. It may not look parabolic there on a 1 month chart. You zoom out here. Let's just go to, let's say, you go to 6 months, take a look at it. And that is a parabolic run. So you start out like this, you start going up, and that is the definition of a parabolic advance. And as I said last week, parabolic advances, I've never seen one end well in my life, unless you were ready to short it when it broke, and we got that yesterday. You can look on the 5-minute chart. I was able to get an initial entry here. When you see it going up, and that's what you got yesterday, you were ramping up. After a strong, when you start going parabolic, then you go near vertical. Again, this is a 5-minute chart. Then you look for these short-term reversal candles, like a bearish engulfing, just big when the trend changes. Again, it's just basically you pop that. you end that momentum, and it just shows you then the buyers, the last, what it is, I believe, is the last of the shorts. Those that were shorted got squeezed out. There was also a near-term breakout, some consolidation there, breakout, and a big ramp up followed by these big red candles, and now you can see it's dropping, and it was thrown out to you on the what I give it to you on the 60-minute chart, I think a monthly. Again, we were looking, yeah, this was it, the May, but you can go into the Junes now. I think I have both up, but this is the May. This is the one I showed you last week, and we had divergence, but then we never triggered a break of either. I gave you two multiple entries. The first being, just didn't mean to grab that line. Move that one. Yeah, first being this one, and that one was taken out now, then this one, and then this one. And that was also a support level back then, but now it's also an initial target. Now what we're doing, we're coming up on that, what I said was my primary trend line. So we could get a reaction there. I wouldn't bet on it. I'm just more apt right now to trail down because this little near-term bubble, or let's say excessive froth or overbought conditions in natural gas, not to mention, as I mentioned last week, hey, seasonality wise, this is when it starts warming up. So yeah, they're taking a lot of Russian, they're trying to take get off the reliance on Russian natural gas over there in Europe. But this is the time of the year where they don't need it as much because things start to warm up. So where it goes, I don't know. The trend line, yeah, is the first. That's a minimum target. We're almost there now, and that may end it. So again, if and when you took it, or if you take it now or soon, your stop is going to be dependent on your entry and also where you think it's going to go. And I would probably have to zoom, and I would have to zoom out to a longer term chart to see if any longer term targets. But here's one that I had. I meant to share that with you. I told you I would revisit the chart last week. And again, I'm going to roll over to the Junes here. And that's actually, nope, I've got Mays. All right. So, yeah, this is the May right here. And that level's at 5.621. That's where I think we can come down to. And if things get really ugly, maybe all the way down here to about 5.26. And I'll put a line there for you. So that's it. And when you look at a daily chart now, let's zoom in nice and tight. Let's just look at, let's go to 3 months daily, and you can see what the daily candle looks like on the futures. Big red candle, but you can see that trend line we're coming up to as well, like I talked about. And then you'll have secondary, larger downtrend lines we may come down to, but I'm going to show you here on the daily chart. You can see this is a pretty significant level right here. Again, 556. There it is. Boom, boom, boom. Some major reaction highs plus this trend line down there. So if we can crack this, if this does prove to be a significant top, then that's where we'll likely head, and that would still be another 21%, 22% downside from where we're at now. Oh, here it is. Yeah, I knew I had the June contract marked up. All right, there's your levels. There was that minor downtrend line, boom, taken out. Secondary trend line, boom. We're almost to right now. I've got a price support level coming in about 673.4, and a trend line as well. That trend line right there. So somewhere in there, and then if and when those levels break, which they very well could and probably will, just over the $6 level. That's 6.077 right there. 5,742, and ultimately, which would be my final target if and when we get there, is this support range down here from about 5,055 to 5.186 right there. Okay, and those are your Junes, so you could swing those down without having to roll. Okay, promised you an update on gold. Still, it's doing its thing. Got a little ahead of itself, but right now it is at a buy point. So to recap, Back here, a few weeks ago, I gave you what I called a hard buy on gold and silver at that, right at that low. Couldn't have timed that one better. Then we went on, rallied from there. We have this trading range that gold's been in. We had one little false breakout above it there, one little whipsaw, but then we broke above that trading range. So the way I see this right now is we have dual support. We have that uptrend line, and we are at that uptrend line, and we also have the top of this this trading range here, and it was also resistance back here at those points. So can't promise you it'll bounce there, but I can promise you that is as objective as it gets, and that is a objective add-on or entry. If you missed the other one, you want to be in gold. If somehow you shorted this divergent high, you can see I've really just kind of been sitting tight on gold right now, not really doing much active trading or anything on it. Still have some core positions, swing positions, and that's that. Let's not talk much more on it. There's not much more to say, but other than it's support is support until unless broken, and if it's broken, that's about 1957-ish and the trend line. And if they take it out with conviction, not just a little whipsaw or a intra-period close. I'm trying to grab that trend line and extend it. It's not letting me. Anyway, you saw where I had it. That's the trend line. If they break it, there's going to be some minor support in here that'll probably come into play. Let me give you that level. And again, it all depends on where you bought and where you think it's going, if you're a swing trader, trend trader, active trader. But no matter what, we're still well above the breakout. We'll come all the way down to here at 1920. If we do, I'll talk about that as being an objective level. But right now, this would be the most likely scenario because that's good support. Step in and buy here. Add to gold and silver. And silver, let's see here. Same thing, right? Uptrend line support and a hair above price support. Let me tighten it up a little for you so you can see it in the video. There we go. Uptrend line off the low. There was a hard buy. Give you back around, what was that, March 29th or so. Moving up, and just like gold, got a little ahead of itself. It's had a nice run, put in some divergence, negative divergence, and that divergence is playing out for a pullback into uptrend line. Support with price support just a little below there from about 25,164 up to about 25,276. Next support below that, there's one just like gold. Let me give it to you now. In between here, at about 24.95 there, and then 24,658. Those are your levels on gold. In silver, that's silver there. And then of course, where it would certainly help to see the dollar play out. I've been highlighting these divergences. We had it. It looked like I thought it was a real deal. We had a divergent high there and a breakdown back test. We started to drop, but they had one other thrust up in the dollar. Has not changed anything from a technical perspective or my outlook. All that has happened is that marginal new high extended. It simply extended the negative divergences that were already in place at that previous high. I'm going to move my divergence line. I already dragged these lines down here. Oh no, there they are. And that's it. I don't have a clean uptrend line right now, but I'll take this one. Here's what I'll do. Try to get an idea of what might trigger that. And go like this, and that was a little whipsaw there. Big support and first target, still first target, 99,344. And after that, right here, and that's still my intermediate swing target. And again, if you took the breakdown in here, the dollar's not up much. So this trade is still very much a trade if you're a forex trader. Short the dollar, 93,344, and down to about first target, and then about this uptrend line in that 97,538 to 97,730 support zone. And to be short the dollar or bearish the dollar is to be long or bullish the euro. Remember, gold and silver tend to go up when the dollar's falling and the euro's rising. And so you had a little false breakout just like with the dollar, but remember, you hit the first resistance level after the breakout. And so you can call that like a BOD, benefit of the doubt, support resistance level that never got taken out. We hit it there. I've moved that line. I'm going to move that line up just a hair because I'm looking, I'm going to show you why I did that. Tighten up these reaction highs here. See, you have boom, boom, boom. And that one fell a little shy. But that's the number. It needs to pop about, and it's also the first target if you want to go long the euro. Don't have any hard buy signals, but you do have the divergence right now. Again, so that was a breakout, failed, went down marginal new low, but only extended the divergences that were already in place. So I wish I had a better level. I would put a micro level right here that might do the trick. And pop the euro if it can pop this level. It is minor support because I have at least 4 distinct reactions there. A couple from above there, one recently. So that's 1.837. The euro can pop that. Should shoot up to that 1.0953 target. Probably get a reaction there. That should be bullish for gold and silver. And then boom, break that out and run up to the next stop there. And that would be quite bullish. Should be. For gold and silver. And last but not least, I said I'd give you an update on that REDU. I've been putting too many individual stocks out there. The pot stocks are kind of stalling around a little bit right now. They're still above where they were first mentioned a few weeks back, about a month ago. But this is REDU, Rise Education, and that one was actually thrown out first all the way back here. It's a trade idea on a break of this trend line. Went up, hit our first target, then gave us our next buy signal, broke out of there, hit that 097 resistance, and most recently was highlighted as a breakout above, I believe that's where it was. I don't know if I did it here. I've been highlighting this stock and some of these other ones for months now, but either way, I believe that would have been it, right above the 97 level. Yeah, and so we're getting close. We're not there yet to T1. It's testing its 200-day exponential moving average now from the 97 level to today's high. Got about as high as 134, 135, which is about 37% gain. Oh, yeah, this is what I want to talk about. I'm not seeing broad-based participation in the sector yet, these online educational stocks. Some of them are from China, some aren't. So therefore, at this point in time, I'm more apt to take profits at the first target and not extend unless I start to see over the next couple days, if and when, before we get to T1 here, assuming we do, then, and I start seeing some others popping and breaking out, then that will tell me just sit tight, raise your stops, Randy, let it run, hold out here for T2, possibly T3. So as of now, if we hit T1, and we hit it soon, that's not bad. A 52% gain within, a week or so. Take the money and run. Or, again, you can trail stops up. Just remember, the one downside that can burn you on trailing a stop, if this was like a futures contract and was trading around the clock, great. You'd get, minimal pullback, get stopped out. But what can happen when you trade stocks, individual stocks, same with ETFs, is gaps. So you could be right up there close to your first target, and then you're trailing a stop up, you're going to ride up here, but all of a sudden this thing gaps down on bad news, and a little low price stock like this can gap down 10, 20, 30%, and that gap can just bypass even the most well-placed stop loss order. So just food for thought. In that way, what's the takeaway from that? Well, maybe if you're targeting, the resistance is 149, maybe you have a limit order set at 145 on that, 146, something a little close. In that day, you're heading into the close and it's trading at 143, 144, and maybe you want to take profits then. And I also like to set my sell limit orders on these. Good to cancel, and check that box on your broker that allows that order to be filled outside regular trading hours, because I can't tell you how many times I've traded, especially low price, more thinly traded stocks like this, that pop in the after hours or pre-market session and hit a target only to reverse back then before the opening bell, and so you never see that trade, never takes place in the regular session. So by checking that box, remember the goal to any trade is to not be stopped out, and it's to hit your profit target. So I never have my stop loss orders to be filled. You can't even do a stop loss. It can only be a stop limit order in the pre-market or after hour session, and those are, you can use those. But again, so I like to have the sell limit orders to exit a trade, a long trade. Check that pre or post market box, but not the stop orders, because you don't want to be stopped out in just that low volume pre and post market volatility, which can really bring stocks up or down. and especially if they see your order. You know, if you don't have, that's another option you can do with some brokers like Interactive Brokers. You can check order, and I like to do that on stop loss orders to have the order hidden, so the exchange can't see it and they can't run at you, especially in a low volume stock. The market makers take it down, stop you out, fill your order, turn around, they buy it, and then it runs up. So if the order's hidden, your broker has it, but it's not there on the exchange. If it hits that limit price, then they're going to send it to the exchange, and you'll be stopped out. Alrighty, lots of stuff, but that's it. So near term, some bullish developments in the equity market. Short term, we got those breakdowns, sell signals on crude natural gas, gold, silver at support. That's about it. We'll wrap it up here, and if anything else stands out, I'll get it out to you today. This has been Randy Finney with Right Side of the Chart. Have a good one.